today. A happy Saturday morning to all of you, and welcome to our spaces. This is where we talk about money, finance, and the economy, and just try to learn, just try to learn, get our juices flowing for the next week and all that. Yeah? So today we are talking inflation. So we do a Twitter poll every 2 weeks, and then you guys get to vote on the topic we should talk about. So this week it's all about inflation. What is inflation? How do we define it? How can we use it? How can it hurt us more or less? So that's what won today. So we're going to talk about inflation, just try to learn together and try to see what we can pick from it, right? Okay, so I'm just going to start off. Normally the program is this. I try to talk for about say 30 minutes, just lay out the theory and all that of the whole topic for about 30 minutes. And after 30 minutes, we open up the floor. You can call in and I can take the questions on the DM. So very, very good way to reach me is going to be via the DMs. I can read the DMs. So that's going to be a fast way to reach me. Or you can also request to speak and I can give you the mic. So yeah, so I'll just give you about a 25 or 30-minute talk and then you can do the DMs and then we can take those questions and then we can learn, right? Great. So let's just start with definitions. Let's just say, what is inflation? And it would surprise you to know that inflation is one of the topics where economists simply do not have a uniform response to. What is inflation? What causes inflation? There's a lot of back and forth on that. But let me just try and say this. When I started off to study economics and finance, what I understood inflation meant was when there's an increase in money supply, then you have inflation. That was how I understood it when I started off, right? So if money supply is increased, maybe the government prints money or there's just too much money in the economy chasing too few goods, then inflation happens. That's how I understood it. But then the more you study it, the more you understand that, listen, there's more to inflation than just money supply. Does money supply cause inflation, or is money supply necessary for inflation to happen? Let's talk about this using three examples, right? Let's look at Japan, let's look at the US, and let's look at Zimbabwe. And you're going to see in these three countries are going to be three clear examples of money supply, but very three clear examples of inflation happening or not happening. Let's start with Japan. So in the 1980s to say 1990s, Japan had this boom. Japan was booming. Interest rates were very low. So in Japan, they were buying stuff all over the place, right? And about 1980s or so, they raised early 1990s, they raised the interest rates, right? So Japan, the central bank raised interest rates, and then the economy sort of like contracted a bit, right? And after that, the Japanese central bank has been trying to induce the economy to grow. So just to give you an example, if you want the economy to grow, that means you want people to spend. You want people to basically spend money, go out and buy, do investments. This has not happened in Japan for mostly a decade. So we have in Japan what we call the lost decade. So trillions of yen, trillions of dollars have been introduced into the Japanese economy by the Bank of Japan to get the Japanese to spend and to try to induce inflation, but it hasn't worked. So we have tons of cash flowing into Japan, but Japan has inflation rate. I think I just saw the inflation rate yesterday in Japan is projected at 0.01 or something like that. It's not even showing up at all. It's less than one, right? So there's lots of money going into Japan, but the Japanese aren't spending. So there's no inflation in Japan. There's actually what we call a deflation, which is the opposite in Japan. So in Japan, prices are actually falling, but there's an increase in money supply in Japan. So you can see that our definition of inflation is not even going to stand up in Japan, right? What about the US? I mean, even before COVID, the US has been spending, printing dollars and spending. with the entitlement programs, with the social programs, with the defense programs, with the tax cuts. All those are spending. How have they paid for this spending? They have paid for the spending by simply borrowing money from China, from Nigeria, from anybody that would buy their bonds. So when you buy the US bond, you are essentially giving money to the US. So tons of cash has been printed in the US, but still, the US inflation rate, if we back away COVID, if we go back maybe the years before COVID, there was also no inflation in Japan. Before COVID, the talk was, what's happening? There's a lot of cash in circulation. We don't have people to employ and all that. But there is no inflation showing up in the books. This was before COVID. Right now, it's a different matter entirely. So also in the US, you had a lot of money supply being printed, but no inflation. So in the US case, the US is able to keep prices low because they are able to sell their debt to foreigners, and foreigners are able to finance that debt. So the economy really doesn't overheat in the US, right? So we've seen Japan that has tons of cash but no inflation. We've also seen the US that have tons of cash but also no inflation. Again, this was before COVID, right? But what of Zimbabwe? Zimbabwe printed lots of currency and there was not just inflation, there was hyperinflation. So in Zimbabwe's case, we had the cash flow and we had the inflation. In Japan's case, we had the cash flow, we had the deflation, opposite of inflation. In US case, we had the cash flow, but no inflation. So you can see that inflation really doesn't have to do with money supply per se. So inflation has to do with what happens to the money in that economy. What inflation really is a decrease in your purchasing power. So when the money supply goes into the economy and the purchasing power of your currency falls, which means that you go into the shop today, you can buy a bottle of Coke for 100 naira, but you go into the shop a month later, you buy the same bottle of Coke for 110 naira. So what's happened that your currency has lost 10 naira, the value of 10 naira. That is inflation happening. So when there's that loss in the purchasing power of the currency, that's when you then start to see inflation. In Japan, why we didn't see inflation is because the Japanese yen has not lost purchasing power. If anything, it has gained purchasing power because the yen has actually, under deflation, gained purchasing power, right? The same thing with the US, it's going up and down, but the dollar has tried to at least maintain its value because it's the where you run to for safety. US bonds are where people run to for safety when the economy world globally is in a turmoil, right? But in Zimbabwe, the cash flow has caused the currency, the Zimbabwean dollar, to lose purchasing power. So much that you have a trillion Zimbabwe dollars and cannot really get you anything. So the key takeaway for us in all this is to say that when the purchasing power of the currency falls, that's when we then have inflation. So the key word for you is purchasing power. Whenever it goes down, then you have inflation, and inflation is the effect. So the effect is that you then lose that purchasing power. Then you can say your economy, you are experiencing an inflation. Your purchasing power is now being inhibited. You can no longer buy the same commodities that you could have bought with your currency in the first place, right? So that's the key thing we want to talk about. Now, economists try to define what causes inflation in two key, out there like four, but these two are the key ones that we try to focus on or want to focus on really. Number one is the cost push. What's happening right now in the world with COVID, when you see the supply, you see the ships of the US, you see the ports are clogged up, you see there's logistics failures all over the world. That is what we call the cost push inflation. That is caused by a fall in supply. So I'll give you an example. Let's say you have a shop, right? And in your shop, you sell pure water. And we know pure water is like 20 naira. What happens if you don't get delivery of pure water for, say, 2 weeks? The price of pure water has to go up because your quantity of pure water has reduced. So that shop, in that particular shop, if that shop was a country, that particular shop would be experiencing what we'll call cost push inflation because the price of pure water will go up because there's no supply of pure water in that shop. So when you go to that shop to buy pure water, the same currency that you use has now lost purchasing power because you have to spend more to buy the same amount of pure water. But in that instance, it's a cost push, right? So you hear economists say supply side economics. So they try to solve that problem by increasing the supply. If they can increase the supply of pure water to that shop, then inflation more or less goes away. So that's the one type of inflation. The other type of inflation you see is where you see what's called demand pull. So in demand pull, you go to that pure water store and there is no pure water because everybody wants to buy it. Because everybody wants to buy it, the cost of that, the price of that pure water goes up. So the demand is causing the price of pure water to go up. You see, in both instances, the price is going up. And because the price is going up, you need more currency to buy the same exact amount of pure water. That is what is causing you that inflation that you are seeing. Your purchasing power is falling because you need more currency to buy the same amount of goods. So we've talked about inflation being the loss of purchasing power of the currency, not really the currency in circulation as we know, but that the currency in circulation causes you to lose value of the currency in your pocket. When you have to spend more money to buy the same quantity of goods, then your currency is losing value. And if we look at history, we can see examples of where this is happening. If you look at Solomon, that had so much silver and so much gold that we heard that silver didn't was had no value. Why did silver have no value? Because there was a lot of silver in the economy, right? So silver lost its purchasing power. The same thing when we talk about Mansa Musa. Mansa Musa went to Egypt on his way to the Hajj, and he took so much gold and he gives and spent so much gold that the price of gold in Egypt was said to have crashed, right? Because there was just so much gold. So the supply of gold, the supply of silver in those periods caused the price of that currency to fall. So the purchasing power, what silver and what gold could have bought for you, was no longer the same because the supply went up, thus the price went down. But then we've countered ourselves by saying that in Japan, they printed a lot of currency, but inflation did not occur. So the key thing for us to take away is purchasing power. Whenever the purchasing power falls, then we end up in problems, right? So let's now come back to Nigeria. We've talked about cost push, which is when the supply is down, and demand pull when the demand is up. What is happening in Nigeria is there low supply of rice, or is there a high demand of rice? It's both of them. In Nigeria's case, it's always different. In Nigeria, it is both things happening at the same time. Number one, we don't have enough rice, local rice. We're not growing enough local rice to meet the growing population growth. That's number one. Number two, there's too much demand. Our population is growing 3% per annum, right? And I don't think rice supply is growing at 3% per annum. So you have both the cost push and you also have the demand pull. But the problem is this: these two things are causing a fall in the purchasing power of Nigeria, of Nigerian naira. Because the Nigerian naira now falls in price, we can no longer afford to buy things the same quantities. That's why you see everything in Nigeria is now in a sachet, right? Because we can't afford to buy a bag of 50 kg rice, then we have 25 kg rice. We have the milk in the little sachets. We have pure water in little sachets. Everything is reduced in size because that's the purchasing power of your currency. We cannot cut currency in half with a pair of scissors, but we can reduce the quantity. And when we are reducing the quantity, that's our idea of saying, listen, 100 naira can no longer buy you, say, a plate of food. So in instance, we'll give you a smaller plate of food because that's what 100 naira can get you. You have to go to the booker with 500 naira because there is inflation. And that inflation is caused by both the cost push and both the demand pull. And what it has done, it has damaged the purchasing power of your currency. That's the problem. The problem is not really that we have a lot of currency or naira being printed. We are printing naira, but the problem is that that naira isn't going to anywhere productive. So because it's not going anywhere productive, then we are stuck with a lot of currency that is causing a demand that we do not have supply to meet. Hence, the purchasing power falls. Just like how you had Mansa Musa in Egypt causing the price of gold to fall. This is paper naira, and that's why the paper naira is falling. So you can see we've done history, we've done economics, and we're right back to where we were what we're talking about. To say, listen, if you do not have should we say, a currency, or if you are in the wrong currency, then you are going to suffer. This is the point about inflation. Inflation is not about having money. Inflation is about what type of assets that you are holding. Because if we define inflation as a fall in the purchasing power of the currency, what it means is that what you are holding, if what you are holding can depreciate in value, then the price will fall. Let's go back to the Solomon, right? They had gold and they had silver, but only silver fell in price. Do you know why? I think they did not have as much gold, right? They had very few amount of gold and a lot of silver. So the silver went down in price. It's the same thing with the dollar and the naira. There is more naira printed per economic size in Nigeria than there is more dollar printed by economic size, right, in the US. So we are overprinting, then we have caused the money supply to fill the economy, and that is what has caused the value of the naira to depreciate. And let me just give you guys a calculation, right? If you had 500,000 naira, right, and the inflation rate went up to, say, 10%, you had to have 550,000 just for you to maintain that same 500,000 naira. So in effect, if you have been earning a salary, right, and inflation has gone up, what has happened is that your salary literally has gone down because inflation has eaten away at your purchasing power. You've got the exact same currency, but it's gone down, right? And I'll give you, if we can use round figures to make it easier, if you earn 100,000 naira and inflation is 10%, and you earned 100,000 naira for 10 years, the value of that 100,000 naira in 10 years is 38,554. So what it means is that if you got a job in 1990 and then you stayed on that job for 10 years and you were paid 100,000 naira and inflation was 10% every year, by the 10th year, your salary is actually 38,000 naira, not 100,000, because you would need to, what you could buy is only going to be bought with 38,000. You would need to have been earning about 260,000 naira just to maintain your 100,000 naira salary. This is the thing about inflation, that the problem, what it does for you is that it takes a tax from your income. Even if you spend, you don't spend, you invest, you don't invest, inflation will always take money from you, right? So we're midway. So now let's talk about what you can do to protect yourself from inflation. We've defined inflation. We've talked about what it can do to you. It does harm to you because it eats away at your purchasing power. That's what it does. If we did not have inflation in the world, then all you would do is this: you would simply work for 10 years, save money for 10 years, and just live all your life with what you have saved for 10 years. But because if you work for 10 years and you earn 100,000 naira, you would only have, like we said, only about 38,000. So you have to work more than invest so that you can then have a rate of return that can give you what we call a real rate of return. When we say real, we mean that after inflation, do you have any funds after inflation? So if anything you do in Nigeria right now, the inflation rate is about 12 to 13%. You have to, first of all, match inflation, first of all, before you can even then say you have made a return on your portfolio. So if your portfolio is paying you 15%, it means that your real return in Nigeria is 2%. 2%. So if you make 15% and inflation is 13%, that means what you have really made from your investment is 2%. Compare that to an American that is earning 100,000, inflation is 5%. Now, because of COVID, before COVID, inflation was 2%. So if he held dollar in his hand, he doesn't has to just make 4% to make the same 2% that you're making. Think about it that way, that a guy holding a US dollar has simply got to make 4% on his investment, but you holding the naira has to make at least 15%. So the dollar has to do 4% to be profitable before COVID. With the COVID now, it has to do 7% to be profitable at least. And you have to do at least 15%. You see where the problem is? So the inflation harming you is what assets you are holding. If you are holding naira, then you have to do more than the guy holding dollar. So the very, very first thing you have to do is to say, what currency or what assets do I want to hold? Because if you hold dollar, then you are looking at simply either a 6% or a 4% return just to break even. But if you are holding naira, you are looking at a 15%. This is just for you to break even. We're not talking about making a profit. This is just for you to break even. So the very, very first thing to do to beat inflation is to try to diversify your portfolio away from just one currency, and especially a currency that is losing value. So the very, very first thing you want to do is to diversify away from your currency. Okay, and buy what? I don't have dollar, I can buy, but you are safe because right now in Nigeria, it's possible for you to then buy foreign stocks. They have lots of apps. I'm not going to do an ad for them, but they have lots of apps in Nigeria that are regulated by the SEC or Nigerian SEC that you can actually save money in foreign currency. We also have Nigerian money market funds that you can also use to save currency in dollar. So simply holding dollar reduces the amount of interest or capital or return that you have to make just to stay ahead, right? I can give you guys some that you can buy. Remember, I'm just being educational. This is not investment advice. I'm not a registered investment advisor. I'm not making you an offer to buy or an offer to sell. But if you were just looking for income, let's say you were just looking for income, right? You could look at something called the Van Vickers. The ticker, if you want to search for it, is going to be SHYD. So if you go to like the stock site or any site, just type in SHYD. Those guys are basically Van Vickers. It's a high yielding ETF. So it's fixed income, it's less risk. The interest rate's about 0.35, but it's in dollars, right? So remember what I said, if you are in dollars, you are looking for a shorter, you can do a 4 to 5% and you are beating inflation. Right now we have 5%, but that's abnormal because of what's happening with the COVID. So normal US inflation is going to be about 2 to 3%. So the income for Van Vickers, that's going to be the SHYD, is giving you year-to-date return about, say, 3.6 to about 4%. That's just for income, right? But if you want to just you want to just protect yourself from inflation and you want to do dollars, you can buy also what's called a TIP, a treasury inflation protected security, right? And Vanguard is like an asset manager. They have a TIP. And I'm going to put all this for you guys on Twitter. So even if you don't hear me, I'm going to type it all out on Twitter for you. So the Vanguard is going to be called VTIP, the VTIP. That's also a short-term inflation return bond for you. VTIP, short-term, expense ratio 0.05. So if you just want pure income, like a treasury bill return, you can buy the first one I talked about, the SHYD. If you want a shorter term, but treasury protected, it means it's going to be like very, very high, very safe, but the returns would go down a bit, then that's going to be the VTIP. But if you can take more risk, right, and you want to also get US dividends, then you want to look at something called the VYM. That's the Vanguard High Dividend Yield, the VYM, right? That's going to be about maybe a double-digit return, maybe about 9 to 12% return. Also very, very low expense ratio, 0.06. The expense ratio is the cost that you have to pay to buy this, right? And if you want an inflation hedge, you want to buy something that's going to protect you from inflation, right? You can also look at the RINF. That's the ProShares Inflation Expectation ETF. That also is going to give you a double-digit return with also a higher expense rate. So you might pay higher and you're going to invest in equity. So you're taking a bit more risk, but this would give you at least some returns in US dollar. So the point is you want to invest in US dollar, right? Because the US dollar gives you a shorter, should we say, I'm trying to use this word now, easier words, a shorter route to beat inflation. The problem with inflation is the depreciation in your purchasing power. So if you shift your currency to another currency, not only inflation would also affect the dollar, but you have a shorter range to catch up to inflation. But if you are in Naira, because you need to make at least 15% with Naira to make a return, then you have a longer way to make a return. That's why we're talking about shifting your portfolio. So all this stuff I'm going to put for you guys on Twitter. Right after this, you're going to see them. So if you couldn't copy them down, not to worry. I'm going to put it on Twitter right now for you, right? What else can you do if you are in Nigeria and you want to protect yourself from investment? Property. Property is very, very good, but property is illiquid. So if you already have a house, you are lucky. If you have land that you have bought and you have the paperwork, you are also good because maybe you could liquidate it if you wanted cash. The problem with real estate is liquidity. It's either going to be rental or you are selling. And you can imagine if you're selling now, the value is good, but people might not be able to pay you money for that value. So that's the problem with real estate because you build a house in 1970, you are renting that house out at the current interest rate today. So look at the rate of return you are making. If inflation goes high, your rent also goes high. So you are protecting yourself from inflation by also having real estate. What else? What else? What about commodities? If you have gold or silver, or you are buying maize or soybeans, or you're buying something that is going to be priced either in a foreign currency or at the current market rate, then you are also protected from holding a currency that is depreciating. There are many ways you can buy gold. You don't have to buy the physical gold. You can buy an ETF. There's called something called the New Gold ETF. Just Google it. New Gold ETF is sold in Nigeria as well, right? And if you buy that ETF, it also gives you exposure to gold. That's the number one ETF in terms of assets under management in Nigeria right now. Lots of people are buying it. So if you get it, you might not make as much return, but it gives you a protection from your Naira falling. That's the advantage of that for you, right? You also diversify your portfolio away from just holding cash currency. And if you want to hold fixed income in Nigeria, do short-term duration. So don't do more than 3 months or more than a year, because if rates change, you want to have the ability to reprice your security. So if you do 5 years, so if you look at 5 years right now, they are paying you very, very good returns for 5 years. But if you do 5 years, you lock yourself in and you don't know what's going to happen. So you want to give yourself some time to say, I'll do 1 year or below 1 year and watch the market. If the market goes up, you can decide to roll over or not rollover. So very important that you stay short term if you are investing. All right, guys. So I've hit the 30-minute mark when I stop talking, and then we take questions and the DM. So I'm just going to copy all the stuff I've said, put it on Twitter for you guys. Then I'm going to open up the floor for you guys to ask questions. I have Sesson ready to speak. So I'm going to just approve you in a second. Then you can speak. I'm going to go also to the DMs. So I'm going to copy this all up to you guys, and then I'll take the questions, and then we can get rolling. I tried to not be too technical. I hope you guys all followed. So we'll just start right now. Let me read the first DM. Hi, are you saying I should not hold Naira, or are you saying I can hold Naira but not invest in Naira? Yes. So what I'm saying is that what inflation is doing to you, right, is that inflation is reducing the purchasing power of your currency. So what you want to do is to be in a currency that does not fall as fast as the Naira. That's the whole idea. It's not the inflation that is the problem per se. It's what the inflation is doing to your purchasing power. So the way for you to avoid inflation is to be in an asset class or in a currency that allows you to escape the bad parts of inflation. So diversify, that's one thing, diversify your currency away from just one Naira. Invest also in currencies that allow you to earn a return that you can rise above inflation. That's the point I'm trying to make. So diversify is very, very important. That's really what we're saying, right? Okay, guys. So I hope that answered that question. I've put up the asset class I talked to you guys about on Twitter, so you can see it on Twitter. I've got Sonny that wants to speak. Let me see. Okay, gotcha. So I'm going back to the DMs, guys. So it's 30 minutes for questions and answers, and I'm all here. We have a lot of people today. Okay, so okay, yeah. What are the right channels to make these investments to avoid stories that touch the heart? I mean the foreign investments. So very, very important. Thank you, Ada, for that question. If you want to invest, you want to make sure that you are only investing in companies that are SEC registered. Very, very important. So in Nigeria, you have companies, make sure that you only do SEC registered companies. If the company is SEC registered, can your money fail? Yes. But at least if they are SEC registered, you have reduced the incidences of giving your money to unregulated bodies. So make sure that you always insist that are you SEC registered, not CAC, not EFCC, SEC, the Security and Exchange Commission. Make sure that you are only using SEC registered companies, right? Only that. All right. So next question here. Yeah, thank you. I appreciate you saying that. This guy is asking, this is Felix, can a cashless policy be used to fight inflation? No, because if you are cashless and you keep your money in plastic, right? It's what currency are you keeping it in plastic? If you store your money in Naira, in Naira on a Naira card, it's the same thing. It's, the value is going down. But if you store your money probably maybe on a dollar card or say in a different currency, maybe in a cryptocurrency or whatever, then you are removing that loss of purchasing power. So the remedy for inflation really is, where are your assets? Being wealthy is having scarce assets, right? So you want to be in an asset class or a currency that is not depreciating. That's what you want to do. So it doesn't matter if it's cashless or if it's in a different country, but you want to be in a currency or a commodity or a country that there is no inflation. That's what you want to do. I hope I answered that question, right? Thank you. So I got Pelumi. He's saying, you said currency devaluation causes inflation, but doesn't inflation also play a role in currency deflation? So Pelumi, when we started off, yeah, I told you that inflation is one of the most difficult things to define and to actually put your arms around. So I gave you 3 instances of the US, of Japan, and Zimbabwe. And in all 3 cases, you had currency printing going on. But in Zimbabwe, you had inflation. In the US, you had no inflation. In Japan, you had deflation. So there is no, I'm not giving you any link of what causes deflation or inflation. I've given you 3 examples, and in those 3 examples, different outcomes. But what we know is this: whenever you have large amount of currency, or whenever you have an increase in supply of anything, the price of that thing goes down. So when Mansa Musa went to Egypt, the price of gold went down because he increased the supply of gold. So gold is not the problem. It's the increase in supply of gold that caused the purchasing power to go down. So when Nigeria prints a lot of naira, we increase the supply of naira. What we should then do is to look for a way to take naira out of the economy, either by putting it into investment, right? So if we're investing the naira, then you have less naira flying around. Then you then have less opportunity for the purchasing power of the naira to fall because of what we then call either cost push or demand push. So that's the point I'm making. If you simply have a naira, it creates the conditions for inflation. But as we've said from Japan, US, and Zimbabwe, simply having currency alone does not cause inflation. So, Pemi, I hope I answered that question for you, right? Okay, so I've got Mohammed. Mohammed is saying, should we just adjust our profit to account for inflation? Yes, Mohammed. If you are selling, look at it this way. In my village, right, we have a small shop in my village, and every Christmas, people come home from the US, from America, they come to the village. So the price of goods and services go up in my village in December, but only in December. So during December, everything is expensive. Is that inflation? It's not. That is just what we call demand push, because the guys that come from America have a lot of money. So they can afford to buy one yam for 10,000 naira. They don't care. They're just buying because they're just going to be there for 2 weeks. But the villagers will not buy that yam for 10,000. But if you are selling your yam and you hear that the prices have gone up, you are doing what's called replacement costing. So you're going to sell your yams today for the price you have to buy yam seeds tomorrow. So that's the problem with inflation, that inflation is like a virus. It spreads. So you hear that the price has gone up in Kafanchan, you will also increase your price in Plateau, in Jos. That's the problem. So if you are selling stuff and there's inflation, you have to make sure you are quote unquote marked to market, which means that you are increasing your price so that when you want to replace your goods and services, you are getting at the replacement cost. So Mohammed, the answer to you is yes, you should increase your prices when there's inflation. Then I have Onyinani. He's saying, since you said we should stay short term, some federal government of Nigeria bonds pay above inflation rate but are long term. What's the risk? Good question. The risk is that you are going to be called mispriced, right? So because, like I said, the longer term bonds pay you a higher rate of return, but they are long term, they are 5 years, right? So if you invest today in 5 years, what happens if interest rates go up? That means those bonds that you're holding will lose value. So what you're trying to do to play that game, you're trying to play that yield curve game. There's something called a bond ladder. Please try to Google it. Bond ladder, like a normal ladder that you go up with. Yeah. Try to Google bond ladder. If you want to play that game, try to do what's called a bond ladder. So you can play a 10-year fixed income investing, but you are doing short-term investments as you go on that bond ladder. I don't think I have the time to explain a bond ladder, but if you are trying to invest for long term, right, to take advantage of the long-term interest rate on a long-dated bond, do that with a bond ladder. Don't just buy just a 5-year at once. So Google bond ladder, and that's what you want to do. Oyinani, right? Okay. Let me see. So I'm so sorry if I don't read your DM. I'm really trying. Some are long, I have to read them, but some I can easily see. Okay, so if I want to buy, can you repeat? Yes, I posted the stocks and the ETFs I spoke about. I posted them on Twitter. So if you go to Twitter, right, you can see all the stocks I posted. It's all there on Twitter. And I'm just gonna post one again. I'm just going to post one right now so you can see it right there. And I'm giving you the ETF name. I'm giving you the expense ratio. Please, this article where I got this from, where I wrote this from, right? I wrote this, I think it's way back. Yeah, I wrote this in July of 2021. So the rates may have changed. So please make sure you research and get the latest returns. This is July 2021, but the expense ratio is the same, right? It's just the return that would have changed because we've had increase and a fall in investment. Some would have gone up because of Tesla. Some would have gone down because rates are also crashing. So just make sure that you are checking those figures, right? Okay, based on this is from Samuel, based on your analysis and explanation, would it mean that a self-sustaining local production could be a way to stabilize the costs of goods and help preserve the purchasing power of the naira? Samuel, you are completely correct. If Nigeria today was able to produce enough commodities locally, inflation will go away. Not just inflation, the naira value will fall. It falls irrespective of what the exchange rate would be. Look at it this way: naira is falling because the dollar is going up, because Nigerians want dollar to import, right? We want dollar to import. What are Nigerians importing? We're importing food, we're importing PMS. Imagine if we no longer imported PMS and food. There'll be no demand push on dollar. If there's no demand push on dollar, then dollar will start to fall from, say, 570 to, say, 300. Dollar is expensive because, like any other thing you see in the market, if the demand goes up, the price will go up. So if you are able to produce locally, we then become like the US, where we have a lot of cash in the system, but that cash is going to investing in fintechs, investing in technology, and that's how they are soaking up those investments away from the market, right? So that's what we want to do. We want to print money, then we have SMEs taking that money and investing in Katsina, investing in Abia, investing in Ogun State. Then we can spread that inflation or that money supply across, and then we don't have that high cost of the dollar and inflation. You are very correct, Samuel. That's what we want to do. So I got Sinja, my good friend, asking a question as pertaining to the current spaces. How do you save your assets in other currency with stabilized inflation when majority of your expenses are in naira? It then means that it's only disposable income that can afford to put in foreign currencies. You're very correct, Sinja. You cannot save if you don't have excess to save, right? But the question is this: I looked at the expenditure patterns of Nigeria. What was the expenditure pattern of Nigeria? What do Nigerians spend money on? Nigerians spend 52% of their income, right, on food. And when do we buy food? We buy food really maybe for a month or for a week. I don't know if we buy food for, say, 3 months or a year, maybe rice. But mostly we buy tomatoes, meats, 3 months and all that, right? So if you really want to play this game, you could hold dollar and change dollar and then buy naira. And that would give you a bit of, you would save some money. That would give you a bit of savings. But the point we're really making here is about inflation, right? And we've said that inflation reduces the purchasing power of your currency, right? And then we gave the example of the guy that was earning 100,000 naira for 10 years. And remember what I said: if you are earning 100,000 naira and you've been earning that salary for 10 years and inflation rate was 10%, by the 10th year, your salary is 38,600 naira. Same 100K is now worth 38,600 naira. So just imagine that you're in 100,000 naira, but your actual take home is only 36,000 because inflation has taken away the rest of it. So think about that. So if a guy was just spending his money for those 10 years and did not invest, just imagine what has happened to that guy. For 10 years, he worked and he was only earning 38,000. Meanwhile, he was paid 100,000. So I would say if you want to invest, I would be very, very careful if you are younger about investing in just Naira because you are exposing yourself to inflation, right? But if you are spending, there's nothing you can do about it. You got to spend. So you might say, yes, I'm going to spend in Naira. But if you want to invest, I would try to diversify by currency, by location, and by asset class. So you give yourself that spread, right? Okay, so let me see if I can approve some guys to speak. Sonny, can you hear me? If you can't hear me, I got bubble tea. If you guys can go ahead and speak. But yeah, go ahead, sir.
So my question is this. The e-naira, since e-naira will be running like my question is, I don't think it can result to more inflation since they can easily inject e-naira and into normal naira.
Okay. I got your question. So you're asking if the e-naira can inject inflation because we're going to have e-naira from the CBN and that might increase money supply. So the quick answer is going to be no, because the way it's going to work is that the e-naira is just the same as your naira. So you go to the bank, you give your bank 100,000 naira, and then your bank would basically give you e-naira of 100,000. So it's the same exact currency, right, that you are giving to your bank that you get the e-naira back. So it's the same volume. The naira will not go up, it won't come down. It's the same thing. So that e-naira itself won't cause inflation. That's how I'll put it, because it's the same currency. Yes. So that's a quick answer to you. So someone is asking, which apps can we safely use to purchase these things we talked about? So I didn't want. Let me give you guys. So in Nigeria, that I know of 2 apps that are approved by the Securities and Exchange Commission. Remember, guys, I'm not making a recommendation. I'm just giving you facts here. So Chaka is approved by the SEC. Also, Cowrywise is approved by SEC. I know many others that are approved that are doing pretty well, but I just want to mention only the SEC approved ones, right? I just thought the SEC approved ones. So Chaka and Cowrywise are approved by SEC. I think the rest are also working on their licenses, and pretty soon we might be able to also say that. Yeah, but that's just to give you that. Yeah. Then I have Oluwa Busola. So if I hear you right, we should diversify our currency base, hold a favorable currency, dollar preferably. What about the effect on the economy in the long term? The dollarization of our economy. I'm only talking for you, Oluwa Busola. I'm only talking for you. I'm a personal finance planner. So all I'm telling you is this. If you hold Naira, you are exposing yourself to inflation. And inflation in Nigeria right now is about 12 or 13%, right? So what you want to do is you want to diversify not just the currency, but the asset class that you're holding. So if you are just holding raw currency, that's a bad place to be because there's too much currency. You don't want to be like the Egyptians when Mansa Musa came to town. You want to hold a diversified currency, a diversified asset class, even a diversified country. So you want to hold Naira and the second currency, be the dollar. You want to invest in stocks, equity, and real estate. You also want to invest in Nigeria and also offshore, right? So you diversify yourself across the currency, across the country, and across the asset class. That's the best advice that I can give you. And Mohammed says, I was not applying replacement costing and my business has suffered. Yes, Mohammed. So if you are selling rice and you bought rice for 100 naira and you want to make a profit of 50%, right? So you sell it for 150 naira. But if inflation is at say 15%, you want to first of all put inflation in first before you put in your cost, your profit margin, because that profit margin is being eaten away by inflation. So when you go back to the market, then you can't buy that same quantity. Remember, inflation we're talking about is the depreciation of your purchasing power. That's really what we're talking about, that your purchasing power is being depreciated again. So Mohammed, make sure you do replacement costing. Make sure you are tracking your unit sales so you can know what's called the variable cost, right? Your variable cost. And then you try to use technology to reduce your cost of sales, because if you can reduce your cost of sales, that's a way for you to beat inflation. So make sure you use technology and then do that. Yeah. Okay. So, Christ, I got a lot of questions here. So, yeah, you can speak. I can hear you. Go ahead. And this guy's asking, so what about Bitcoin? Oh my God, what about Bitcoin? Is Bitcoin and cryptocurrencies? That's from Shola. Is is Bitcoin and cryptocurrency a good way to invest? I deliberately did not mention cryptocurrencies in these examples because the answer is yes and no. If you are holding Bitcoin, you have done better than even the dollar and the naira. That's clear. But in that period, there were some periods in Bitcoin that the price went down to 33 to 40. Now it's on 65. So you can't, the problem I have with Bitcoin is that you can't plan with it. You might say, I'm going to have my wedding in 3 months. So I'm going to buy Bitcoin to hold my money till 3 months, right? And in the 3 months that you're waiting, Bitcoin's price will crash. It doesn't mean the price will not go back up, but you need your money at 3 months' time, and Bitcoin's price has crashed to by 50%. So then that's the problem I have about advising with Bitcoin, because I think you might need it then and you might not have it. That's just the problem, the question problem I have with Bitcoin. So that's why I'm not advising Bitcoin. If you want to do it, it's taking more risk, but it might work out for you. Somebody is saying inflation rate, Mr. Shinja, my friend, is saying inflation rate is 16.63. Is it that high? We'll check. Let me just check it real quick. Yeah. Nigerian inflation rate came down. If it's that high, I'll be surprised. Okay, so I got this question. So Nigerian inflation rate is about 15.97, give or take, 15.97. Yeah. So I mean 15, 16. So what that means for you really is that you want, if you are holding Naira, look, if you're holding Naira, you're looking at making 20% to just stay level. Forget if just 20% just keeps you level. Otherwise, you'd be like our guy in 100,000 naira and only earning 38,000. Because if inflation is about 15, right? You want to first of all hit about 15, then maybe make about 2%, on top of that, or 3% on top of that, before you just say you've grown your money. So that's the problem about saving in naira. That's just a big problem I have, really. So yeah, I'm just giving you guys the facts. I'm not here to bash anybody, just giving you the facts, right? So just take the facts. I'm not saying this guy is better. This is just the facts I'm laying out for you guys. Okay, somebody's asking, well, what about Nigerian stocks? Are Nigerian stocks, this is from Shola. Okay, are Nigerian stocks a good way to invest and beat inflation? Right. So if you look at I had posted the Nigerian stock market, right? And I compared it to the Nigerian inflation rate. And I think I did that from 2002. What I saw, I did not see any correlation. In some years, the Nigerian stock market beat inflation. In some other years, the Nigerian stock market did not beat inflation. There was no clear correlation. You could not look at it and say, oh, if you buy stocks, you can beat inflation. If you don't buy stocks, you might not beat inflation. I also checked with the US market. So I looked at the US market, right? And I looked at it decade by decade. Also, there's a good data point there from New York University where they are comparing the stock market return for decades. So they are going from 1934 to 1942, 1943 to 65, 2009 to 2020. So for this long period, right? And they also got that conclusion from 1934 till 2020, only in just two periods has stock market returns not beaten inflation. So in the US, it's a bit clearer that the stock market returns are about 9%. And that 9% average is beating inflation for some years or more years than inflation is beating the stock market. So if it's a US market, the data is a bit clearer to say that if you took more risk and you adopted more volatility in your portfolio and you then got stock market return, that you could beat the inflation rate more on the stock market investing than in Nigeria. In Nigeria, some years the stock market was good, some years the stock market was bad. There was no clear correlation. That's just the honest truth. And I put the chart up for you guys and I asked you guys, did you see any correlation? There was just no correlation really. So that's just really why I stopped. Mr. Kudos, long time, so I haven't seen you. You've put UST at the back of your name. Okay. So the inflation rate is that high. Volatility is a disadvantage with cryptocurrencies. But there are some DeFi protocols that gives better ROI and very stable. People are just greedy and are not okay with 20, 30% for just saving. Kudos, if you give them the DeFis, I want to know which one pays you 30% stable. I want to invest in that. So if you give it to me, I'd like to know, right? So then just approve. Vicman, you can go ahead and talk, sir. So let me read the questions again. Okay, yeah. What can I do to ensure, this is from Abubakar Jr. Okay, let me see. You want to increase the membership of, you want to pull together funds. You're basically asking how you can increase membership. If you want, so this is a different question, Mohammed Abubakar, but look at it this way. What are you selling? You want to sell incorporation, right? So my latest article is on how to get money from founders. What are you selling? You are selling incorporation, you're selling shares. What's the price of your shares? You want to make people, why should people buy your shares, right? What's the earnings you're going to give in 10, 5 years? What are you selling that is unique, that is different from competition? I think that's the question you want to ask yourself. If you could please Google my article on how to raise venture capital, I give you some steps there on what to do. Basically, how you should structure your incorporation, how you can write what's called a pitch deck. The pitch deck has things that you have to want to write there so you can then meet investors and ask for funds. It will be a good idea for you to have your thoughts on paper. So you are asking yourself the same questions that investors will ask you. But if you want to increase membership, you want to first of all start from family and friends, people that know you, before you then go to seed capital, then you go to your angels before you then go to venture capital, right? So start from people that know you, do your family and friends, then do seed, then do angel before you then go to the bigger boys, right? But start low first. So please get my article and read it. It's just how to raise venture capital. I write for Nairametrics every Monday. So try to see if you can find it. I'll post the link for you here so you can also read the book. Yeah. Thank you so much. So I'm so sorry if I cannot read your message. I do apologize in advance, but yeah. If I've approved you, Vicman, just go ahead and speak. I can hear you. Okay, Sonny, you can go ahead and speak again. I can hear you. Yeah, thank you. Okay, so I'm just going to read more messages here. We are almost at the break of the hour. So it is normally a 2-hour or 1-hour session. Thank you guys all for being here. I do appreciate all of you. I will just try to read a few more messages. And so food inflation is 20%. That's what I've been told. Food inflation alone is 20%. Wow. Okay. Right. So, I mean, If you're buying food and food is increasing in cost by 20, look at it as the reverse. So 20% is what you have to make up just to be at the same level that you were on, right? Before you even start to invest. So yes, I agree with you. It's a struggle, but we have to get to it, right? Baba, I hear you, sir. Go ahead. If I click you, just go ahead and speak. I can hear you. You don't have to send me the DM. Yeah, Baba, go for it. Yeah. I just answered you. Yeah. Okay, thank you. So guys, this is it's 10 a.m. Literally, we are done. Literally for the session, I will stay for some time and answer questions before I shut it down. But thank you guys for listening. If you have questions and you send me a DM, I will answer on the topic. And we do this every 2 weeks. So I'm going to put up a poll this week, and you can select basically what you'd want to ask, and I can take them. So if you stay this long, I appreciate you. Thanks for tuning in. And I'll see you guys again in 2 weeks' time, right? So yeah, if you do send me a DM, I'll answer, but I'm going to shut down the spaces right now. Thank you so much, guys. I appreciate you guys. If I didn't read your message, I do apologize. I will try to replay them now. Son, is that you? Bond, how you doing? Go for it. I'll take it before I close. Yeah, go. How can I help, sir?
All right. So you when you are mentioning some investment vehicles to beat inflation, you mentioned real estate, right?
Yeah.
So I've been discussing with my friends. I've been trying to make sense of investing in real estate. So I'm like trying to ask your advice. What is the best way to invest in real estate? Okay, so we are looking through some properties, right? So let's say about 10 of us come together with 5 million to buy property of 50 million, and then put the property on rent of 3-4 million. Do you understand?
Yeah.
I mean, you won't be getting up to we are getting about 6-7% return per year.
Yeah.
Do you understand? So it didn't really make sense. So, like from your experience, what is the best way you think one can invest in real estate?
Yeah, I think the one you've described, I like it because you are investing in. That's actually how you invest in real estate. Real estate is a long-term investment, right? If you're not selling that property, you have to wait and get the rentals. It's not a bad return at that 6% because you are going to keep on increasing your rent every year. So the only other way to shorten your rental is to sell. You buy, you flip, and you sell, and you take your cash out. But if you want to buy real estate to rent, that's not a bad return for you, sir. But if you look at if you can Google REITs, when you Google REITs, yeah, you are buying an investment that is doing what you are saying. So you are buying a real estate trust. Those guys buy property, then they rent it out, then they give you a share of the rentals. So Google REIT. We have a few REITs in Nigeria, and we also have REITs outside the economy. If you go on even those Nigerian apps I told you about, just type REIT there. You'll see lots of REITs will pop up. I think Vanguard has a REIT. That's a good way for you to just take your currency. If you don't have millions, you can just buy a REIT that is in dollars or so abroad and also get that dollar rental return. If you have more money, there are also some companies that you can buy the same thing you were saying, but get also a dollar return. But when you buy real estate, it's a long-term investment bond. There's no other way around it. You can't get a rental that would pay you back your capital sum immediately. You understand what I'm saying? So when you are buying rental, it's also long-term. So if you get a good location, hold it, because in 5-10 years, that 3-6 million is going to go up because of inflation, and you have it. It's sunk cost. You already have it. So that's what I would say. If you have the money, what you're doing with your friends, I like it a lot. Think about, don't do those 3-4 bedroom houses. Think about 1 bedroom, 2 bedroom. Think about student hostels. Students pay, they don't owe, they come and they go. So you're always getting tenants. You can turn around your money faster. So do 1 bedroom, 2 bedroom. Don't do those 4, 5 bedroom things. No, do 1 bedroom, 2 bedroom. Think of hostels. That kind of real estate. Think of lock-up shops. Things that you can turn your money around much faster than just 1 year rental. That's maybe what you can do. So Google REITs, and then if you want to do property, do those short-term, those what's called smaller rooms, because then you can get more rental per square space. Does that make sense for you, sir?
Yes, definitely.
Okay, I appreciate you, sir. Yeah. Yusuf, are REITs a good way to invest in real estate? Yes, the answer is yes. Yeah. So that REITs are a good way to invest. I just want to mention, so this is Tosin. Tosin is telling me that I want to mention that in Lagos, rents increase at almost every 2 years, and that's the most I've seen. Also, it increases by 5 to 10% at a time. Is this reasonable? Yes, because rentals are trying to keep pace with inflation. Remember, we talked about replacement cost. So if I have a flat and I built that flat in 1970 and I built that flat for 700 naira, I'm going to still rent that flat today at the current price today. I won't rent it at the price I bought, which is my historical cost. I'm going to rent it out at the price for today. So 5-10% is good because you want to think long term with property. You can't invest a capital sum and get it back 2 to 3 years. You're linking at maybe 10, 15 years for real estate investment. So that's what I would advise you to do, right? Thank you, Tony. Appreciate you listening. Thank you. If I buy dividend stocks on Chaka or Carrywise, would I be paid dividends on my shares? Yes, Ridwan. If the company pays you a dividend, then they pay it to your wallet that is in Chaka or Carrywise, right? I think Carrywise sells mostly ETFs, but Chaka, I think, can buy the stocks. But I think the way it works, when you buy those stocks, then you are able to basically get the dividends in your wallet. Engineer Aliyu, it's REIT, so Real Estate Investment Trust, REIT. So REIT, I'm going to type it in for you, REIT. Yeah? I just sent it to you now. So Google REIT. Let me see. My friend is back. That's okay. Let me see. Kudos, let's talk about this offline. I'm interested in this thing you asked. Let's talk about you offline, right? So we'll talk about this offline. What can I do to increase membership? Yeah. So guys, let's just shut this down. If you want to talk, let's talk on DM. Thank you guys so much. I love you all. I appreciate you guys. Take care. Love you. Bye.